Volatility is back for the energy sector, but these three stocks have a lot of long-term potential this year. Joining us now to share his top 3 energy picks for 2026 is Marc Lichtenfeld with the Oxford Club. Marc, so great to have you back on the show. We love talking to you about the stocks that you're looking at, not just for right now, but that also carry a lot of long-term potential, which I know that's kind of your specialty in investing. And this conversation is so timely right now with everything happening in the world and those geopolitical tensions. So let's start there before we get into the list. I want to talk a little bit about what we're seeing in the energy market as far as volatility. We saw that big spike, then some pullback. It's really kind of been everywhere just this week.
Yeah, and not surprising. I mean, given what's happening geopolitically, the United States and Israel attacked Iran. Naturally, oil prices are going to spike. And then just in the last 24 hours, though hostilities certainly haven't ceased, there hasn't been any major news, any major developments. So it's, again, not too surprising that oil prices came back in a little bit. I'd be surprised, though, if oil comes all the way back down and kind of settles back to where it was before the war started, assuming that hostilities continue in Iran. I mean, it just seems that until things are a little bit more settled there, till we know that the Strait of Hormuz is wide open and traffic can flow through there freely, until that happens, you've got to assume, or at least I do, that there's going to be price pressure on oil.
Yeah, let's talk about when you're talking about energy and your top 3 energy picks. More broadly, I mean, energy covers so many different sectors. Where specifically are you looking this year, and how has what's happened in Iran impacted where you're looking at energy this year?
So definitely want to be focusing on the United States and the capabilities that we have in the United States, or Canada is fine too, but we don't want to be relying on having to get that oil coming in from overseas, especially going through the Strait of Hormuz. Fortunately, that is not too difficult to find. As you well know, the United States have become the major oil producer in the world these days. So there's plenty of things to look for. And then within North American energy, I really want to diversify. I don't want to just own the drillers or just own, one specific area. I want to have diversity across a variety of energy businesses so that hopefully there's always something working, or if drillers are facing margin pressure, perhaps the pipelines are doing, perfectly fine. Kind of like any portfolio, if I'm choosing a group of stocks, usually I'm going to try to have some kind of diversification.
Yeah, I want to talk a little bit about other areas of energy. You were on our show maybe a year and a half ago. We had a really great video talking about nuclear energy as the big thing. The energy discussion, power discussion has been a huge topic all this year. Does anything happening right now this week impact those other areas of energy as well?
I don't think directly. I mean, certainly it just reemphasizes the dependence on oil, and especially if oil prices continue to go higher, and there are some price shocks, and that hurts the American consumer. It could hurt profit margins, things like that. I think it'll emphasize that we do need to diversify away from oil a little bit. And nuclear energy is, I think it's not even an argument anymore that it is one of the long-term solutions. But it is a long-term solution. It's not happening super quickly. I mean, there's certainly construction, there's development, but we are not at the point yet where nuclear energy is replacing oil and making much of a dent. So certainly still love nuclear energy and want to be positioned in it for the long term. I think it absolutely will be the future of energy in this country. But for right now, yeah, it's still about oil, and oil is still the dominant energy in the United States and Canada, and probably will be for some time.
Well, that's what we're going to find in most of this list today. We're going to get into the names in a minute, but I know that you are always looking for solid companies that have strong dividends too. That's a part of the Oxford Club too. If you want to look at what Marc and his team at the Oxford Club are doing, make sure to check out the top 12 dividend stocks. This is a free report, and it's a list of 12 stocks that are all very solid. Again, this is something that the Oxford Club really specializes in. And Marc, we're so grateful that you're here to share some three solid names with our viewers today. So let's get into your top energy stocks for the year. What's the first company that you're watching right now?
Sure. So as I mentioned before, I kind of want to have a little bit of diversity even within the same sector. So I'm recommending an upstream, a midstream, and a downstream company. So a company that pulls the oil out of the ground, a company that transports it, and a company that sells it. So the first one, let's go with the upstream. That's the oil producer, and that's APA. It's got a 3% yield. So it does have a decent dividend. It produces oil in the Permian Basin, also in the North Sea, as well as Egypt. Now, Egypt is actually natural gas, and so far there are no reports of any disruption from Egypt. But that is certainly something to keep an eye on. That being said, the bulk of its business is oil from Permian Basin and North Sea. So even if Egypt gets disrupted a little bit, probably won't be a huge dent in their business. And if the stock comes down as a result, that'll be a great buying opportunity. So this is a company that's been around for a long time. It's well managed, generating lots of cash flow, growing. They actually reached their cost savings goals 2 years earlier than expected. And it's undervalued. It trades at just 8 times earnings and less than 3 times cash flow. So I think it's a bargain, and it's a company that is, like I said, is well managed and is growing their business. I think this is a really great oil producer, oil and gas, and it's not one that is mentioned all the time like a Chevron and ExxonMobil is.
Right? This is one of those names that you don't hear or think about right away. And I think that's what's great about it, too. The other thing, there's a few different stats looking at this stock that I think are great. To hear you say that it's undervalued right now in the price to earnings, even though it's seen such a strong year. You look at the chart for this one, and it's had a really strong year, up almost 30% just this year, and year over year, up over 60%. So it's grown a lot. And for a long-standing company, I think the big question is, why has it seen so much growth in the last year?
Well, I think people are starting to discover the fact that cash flow is growing and the fact that they are executing on their cost savings plan. This is something they've been reporting each quarter, the progress that they've been making. So, I think there is some recognition that they're executing very well, and the fact that it's still undervalued, but it was even more so before. So that's certainly attracting the bargain hunters, I believe.
Yeah, you're talking about performing really well. The last earnings report that came out just last week, really incredibly strong for this company. Again, curious why now it's executing so well.
Yeah, they are, I believe, turning a corner. This cost savings is a pretty big deal because that's really going to increase their margins. So as the street recognizes the improvement and the fact that it's coming 2 years early, I think that's a very big part of the story. And then, very short term, you mentioned the earnings report. At the same time, or immediately after, the stock broke out of, pretty much I'm looking at the chart right now. I don't know if I would call it quite a base, but it had come down and kind of had a bit of a V bottom. It's broken back to a new recent high and to a level I hadn't seen in about 6 months. So I think once it broke $30, it caught a lot of people's attention, especially technical traders, other people who are looking perhaps for a spot to get in. They wanted to feel a little bit more comfortable from a risk reward standpoint. So I think once it broke $30, that got people interested again.
Yeah, this is a really great name. And again, one we haven't talked about much on the channel. Other times we've talked about oil or energy, it hasn't popped up. So thanks for bringing this one to our attention. I'd love to hear from viewers if you were in this stock before it had the run up that it's had in the last couple of months. Again, like you said, it was even more of a bargain when you were looking at it even just a few months ago. So an interesting name. I'm curious if anyone had it on their radar before. Let's get on to the second company that you have for us today in energy, Mark.
Sure. So this one would be considered downstream. So in other words, they refine the oil once the oil is pulled out of the ground by an Apache or another oil producer. And this is Marathon Petroleum. Ticker symbol is MPC. So they have about a 1.9% yield, so not quite as big as APA, but it still has a decent yield. They also, and Marathon also does have retail outlets, gas stations. So they're also selling the gas. But it's the largest refinery system in the country. It can refine 3 million barrels of oil a day. And when oil prices are volatile or rising, then you tend to see margins improve at refineries. And so right now they're at their highest level since 2023 on the war news. So that's, a positive for this company. And if oil prices stay elevated, chances are their margins are going to as well, which will certainly mean bigger profits. Their net income was up 17% in 2025. Earnings per share was up 31% because they reduced their share count significantly. Very cash flow positive. So I think there's a lot to like here.
I think the interesting thing looking at this one in particular is the war and the conflict happening in Iran is not new. We kind of have a playbook of how this has played out in the U.S. economy before, especially with oil and gas prices. We saw that immediate impact, right? There's been a nice spike in marathon stocks so far. But when does that real impact start to happen in the past with what we've seen with a conflict in the Middle East and impacting oil prices? Could there be even stronger impact down the road if oil prices stay high, if this conflict continues and drags out and continues to kind of disrupt the production and flow across the globe?
Absolutely. And I think the Strait of Hormuz is really the key here. So if traffic is not able to flow through there easily within a relatively short period of time, and I don't know exactly what that timeline is, but there'll be a certain point which the market says, okay, enough is enough. This is a problem. And you'll see prices start to go even higher, which again would kind of ripple through the economy. If the opposite happens and traffic does flow through there freely, you could see prices drop pretty quickly. Again, some will depend on supply and demand and the health of the U.S. economy and the global economy, of course. But I do think that there's going to be significant, let's call it an emotional reaction to what's happening in the Strait of Hormuz and whether that gets opened up in time to satisfy the market, whatever that timeline is. But I do think that will be kind of the point at which you do see prices of oil really pivot either to the upside or the downside.
Yeah, I think we can't ignore and we have to talk about the short-term impact. And that's what this video is about. We're talking about energy right now for a reason. It's something that's on everyone's mind. But I also think that it's important to talk about the long-term outlook because even before the Iran news broke over the weekend, this stock was still going very strong. And I know it's one that you are bullish on long-term as well throughout the entire year. So take the Iran conflict out of the story right now. What about this company has that long-term potential, even despite the geopolitical issues happening right now this week?
I think a few things. As I mentioned, you've got strong earnings growth, strong cash flow growth. They're reducing the share counts, or earnings per share should increase. But then also, if you just look at a stock chart, it's just in a nice uptrend. And I like to buy things that are in uptrends. I'm not a bottom feeder. I don't try to pick that point at the bottom. It's too difficult. I don't catch falling knives. So I like to buy things that are rising. And this is in a really beautiful uptrend. There's a lot to like here, both on the fundamental side as well as the technical side.
It's good to hear your philosophy too on looking for stocks that have that uptrend. I think it's a great piece of information for investors who might just be getting started to be looking for those strong stocks that have a good uptrend. So thanks for sharing that. Let's get on to this third stock. This is another one with a really strong uptrend, and I'm actually excited. I think this is the one I want to add to my Burton Spies watch list. This is our paper trading watch list where we track all of the different stocks that we talk about on MarketBeat. I usually pick one per video, and this final stock that you have for us, I think is a really good one.
Oh, thanks. And I agree. And, they say you're not supposed to have like your favorite children and you're not supposed to have your favorite stocks. Well, this is one of my favorite stocks. So it's Enterprise Products Partners. EPD is the ticker symbol. It's got a 6% yield. So they are midstream. So they own pipelines. They transport oil and gas throughout the United States. Any oil producer that needs to send their oil to a refinery, very often it will go through Enterprise Product Partners or a similar company's pipelines. And the nice thing about this business is once they build the pipeline, there's not a lot of capital required. These are not large corporations with tons of employees. They're basically a toll collector. That's how it's often described, where the companies that are transporting their oil and gas just pay a fee, a toll, to transport it. So there's just not a lot of operations there other than just maintaining these pipelines. So it's a very simple business. And as a result, it's very, very cash flow positive. And the nice thing about Enterprise Product Partners and a lot of the pipelines companies they are master limited partnerships. And as a partnership, it has tax advantages for that dividend. So when you get paid the dividend, it's actually called a distribution. It's a matter of semantics, but there is a difference. When you get paid that distribution, typically you don't get taxed on it in the year that it's received. It'll lower your cost basis. So when you eventually sell, your cost basis will be lower, your capital gains will be higher, and you'll have to pay the tax at some point. Like I always say, Uncle Sam is going to get his money some way. But in this case, it's much later. So you can collect the 6% distribution yield essentially tax deferred for many, many years, which is a really nice advantage to owning these companies. Now, there is a little bit of I guess, a con if you're making a pros and cons list in that instead of getting a 1099 DIV like you would with any regular dividend stock, you get what's called a K1 statement. Some accountants will charge you more for handling a K1. They're often sent late, they're often revised, so they can be a bit of a pain in the neck. But to me, it's completely worth it to have that tax deferred income for many, many years. And as far as estate planning, if you are collecting this tax deferred income for years and then you pass, your heirs will inherit the stock at the current market value. So essentially, you'll have earned tax-free income, granted in the worst way possible, but it's still, you will have never paid taxes on that income, and neither will your family, assuming that you're below the estate tax line. So it's a great way of collecting a good chunk of income every year. Enterprise Product Partners also raises the dividend every year for 27 years. So getting that dividend growth with that big tax advantage. So I really, really love this story.
I love the way that you explain this because we're not just talking about how is this stock going to move in the next week or the next month. You're talking about building long-term generational wealth, and you're looking at solid companies to help do that. So thank you for breaking that down and explaining the tax benefits. I've got a few more follow-up questions on the company itself, but I think it's a great time to talk about that free dividend report again. As you can tell by that explanation that Marc just gave, this is his specialty, and this is what his team is so good at. So if you want his free report of the 12 dividend stocks out there that they're concentrating on most right now this year, you can get that for free. Just scan the QR code or click the link in the description to get that list of 12 dividend stocks from Marc and his team at the Oxford Club. But Marc, let's continue a little bit more on this company in particular. I know you talked about the business model. It's really low cost for upkeep, but that initial cost is quite a bit. Are there any current projects underway that are really big expenditures for this company, or are they pretty set where they're at with that infrastructure already built out?
Yeah, they're pretty set. I mean, there's always going to be, some repairs and some new projects coming on board, but nothing big that is going to change the financial picture. That's for sure. This is a company, like I said, with strong cash flow growth, and keep in mind with that 27-year history of dividend raises, they're going to do everything possible to continue that because, when a management team has raised its dividend for so long, you're talking over a quarter of a century, they know that dividend growth is one of the main reasons that investors are owners of the company. And so if they suddenly do something to change the trajectory of the company where they now cannot raise the dividend after 27 years in a row, they're going to have some explaining to do to investors, and there's going to be a lot of upset investors. So, they're going to do everything they can to continue to raise the dividend. Not that, companies with long dividend histories never cut the dividend or stop raising it, but for the most part, these long histories tend to go on for a while because it's become so important to their shareholders. So they're not taking on anything that is going to certainly disrupt that anytime soon.
Yeah, last question on this one. I think like the companies that you've mentioned already on this list today, these are strong companies that have a solid history, strong balance sheets. They've been around for a long time. But it is interesting that these long-term companies are in such a 3-month bounce right now. They're doing so well. The last 3 months, this company in particular grew more in the last 3 months than it did year over year. And so that's a lot of short-term growth. And I know I've already asked this on some of the other ones, but anything different here to talk about of what's this short-term catalyst that's really helping this solid long-term company that's usually a steady growth story to see maybe more of a significant jump than we would normally see?
Well, we did see oil prices start to bounce, or they at least bottomed at the end of last year and have come up. So even before the war in Iran that really spiked oil prices, you did see oil bounce from about $55 to $65 in 2026. So that's a meaningful move. And certainly oil companies' stocks followed suit and actually, even I would say led in front of the recovery in oil prices, perhaps even telegraphing that oil prices would increase. And then you also, of course, had the threat of war in Iran. I mean, this was not a surprise attack that came out of nowhere. So certainly the markets were pricing all of that in as well. So I think that's why you started to see some of these companies move. But, kind of as we discussed, these are in trends. These weren't just sudden moves. If you look at a chart of oil, that was in a downtrend and recently spiked higher. But some of these oil companies have been trending higher for a while. So it's not something brand new. And when a trend is in place for a while, it typically continues for even longer.
Always good information, Mark. Thank you so much for coming on today. If you like some of the unique stock stories that Mark shared today, make sure to check out our other very recent interview where Mark shared his list of unique ways to look at AI infrastructure. Again, these are more unique names you might not have thought about as related to the AI build out story. Make sure to check out that interview here too.